Hello and welcome to another edition of Stockwatch. So the big Wall Street banks have done it again with the earnings season, with Bank of America and Morgan Stanley really pushing the Q4 estimates to exceed expectations. Let's just take a look at Morgan Stanley's numbers. So earnings per share came at $2.01 versus $1.91, and revenue came in at 14.52 billion against 14.6. And it's looking like it's doing profits on strong equity trading throughout the last 3 months. So basically, it's like they have geared up the big banks for this pandemic halt in the last year, the last 12 months, and Morgan Stanley as well. Looking to really start pushing on the numbers. Earnings came in at 82 cents a share versus 76, and revenue at 22.17 billion versus 22.2 billion. We looked at Morgan Stanley jumping nearly 2% in shares yesterday, and the second biggest US bank, Bank of America by asset, said that the quality improved during the last quarter, allowing it to release $851 million in reserve. So very, very significant numbers there. And like I said, it's like the big banks or the big players in Wall Street have just basically come to terms with the pandemic, and they've put procedures and measures in place to make sure that they're not cutting any costs for their earnings season, and everything's pretty buoyant at the moment. If we take a look at Bank of America first of all today, we're seeing at the moment that prices have just been accelerating throughout 2021, not really slowing down whatsoever, and now we're looking for another leg to the upside. Yesterday's price action was a little bit choppy. As you can see, the candlestick ended in a red. However, it was quite a full body candlestick and a large one as well. So the bias looking like it's going to stay to the upside, at least for the time being. The only thing that I am worried about at the moment is a slight bearish divergence on the RSI, which is just seeing prices be a little bit exhaustive at this peak, and that's why we have seen in the last few sessions a move to the downside. So if we do get more of a clarity towards the downside, then my first step will be seeing if we can touch this Ichimoku cloud with the Ichimoku indicator that I'm usually using, penetrate it because it's very thin, and then we might see another leg to the downside, roughly about the lower end of the 40 region. However, saying that, we are looking again at another leg to the upside if price action and buoyancy stay intact for the rest of the trading week. Obviously today is Thursday, so another couple of days of trading for the big bank, and we'll see what comes to fruition for that. If we look on the 4-hour chart as well, we're looking at the moment, it was pretty much after this recent climb that we saw at the beginning of Q4, we saw quite a choppy action, but the main significance is we have managed to break these recent peaks that we saw at the back end of 2021, and now we're seeing, as I say, a little bit of exhaustive measures here, but with this very bullish candle that we saw, as I say, it has ended in red, but it was quite a significant break and spike up to the recent peaks. We could see that again when trading does open, so just be aware and be cautious of that. And if we just take a look on Morgan Stanley as well, I'm just seeing as well for Morgan Stanley, we did have quite a significant price defect here. We saw this kind of sideways momentum that we were looking to break out of. We did break out of it, but as you can see, very large gaps in the market brought the bias to the downside. But we have been testing this recent trough again, and not really too many divergences on the RSI to speak about at the moment. Everything seems to be going according to the RSI. However, I'll just be looking to see if we can see this significant bounce off this lower channel to push higher. The Ichimoku cloud is quite thin at the moment, which leads me to believe that we could see another move to the upside sometime soon to test this recent upper regression here. And just looking on the 4-hour chart, if we keep this channel intact, then as you can see, very, very significant support there at the lower channel, and then we'll see if we can really penetrate this really thin cloud to see if we can see another leg to the upside. But this is all in store and all coming for the earnings season. So once the earnings season ripples effects have calmed down, we'll see if that's going to have any bearing on price action going forward. So that's all from the Stockwatch today. Once again, thank you very much for joining me, and we'll speak again tomorrow. Bye for now.